Welcome to 5-Star Signals. My name is Brian Armbruster. This is the Introduction to Candlesticks Volume 1. During this video, I'm going to be discussing what the Japanese candlestick is, some basic trader terminology and candlestick terminology. I'm going to discuss candlestick basics. I'm going to show you the difference between a candlestick chart and a bar chart. And for the conclusion, at the end of the video, I'm going to be discussing some of the upcoming content that you will see in videos to come. So what is the Japanese candlestick? The Japanese candlestick offers an exciting dimension of technical analysis. It offers a visual appeal of the market. Japanese candlesticks offer a picture into the psychology of trading. Okay, as a new and exciting dimension of technical analysis, Japanese candlesticks and candle pattern analysis will help individuals who wish to have another tool at their disposal. This tool will help sort and control the constant disruptions in the currency market. What does candlestick charting offer? Well, as far as actual data displayed, nothing really. However, when it comes to visual appeal and the ability to see data relationships, candlesticks are exceptional. They offer a quick insight into the recent trading psychology. After a minimal amount of practice and familiarization, candlesticks will become a part of your analysis arsenal. You may never, ever return to a standard bar chart or line chart. So, sit back, relax. It's not going to be too daunting. It's going to be fairly easy. I'm going to explain it to you as if you are a newbie. I'm going to discuss certain terms with you, define those terms so you have an idea of what we're discussing in the future. Simple as that. I'm going to make it easy. So, candlestick terminology. Why is this important? You need to know what a candlestick is. So when we say what type of chart are you trading off of, a candlestick chart, you know what we're talking about. So I'm going to analyze a candlestick and describe what a body is, describe what a wick is. I'm also going to describe what engulfing candles are. I'm also going to show you how to look at the open of a candle, the high of a candle, the low of a candle, and the close of a candle. So the body. Right here you have the body and the wick. You have the wick, and that forms your candlestick. It kind of looks like a candlestick. And that's probably what the Japanese thought hundreds of years ago when they named this particular piece of analysis a candlestick. So again, you have the body, you have a wick, and you have a wick. So when we refer to, did you see that candle yesterday on the Euro USD? It had a large wick. That wick was 20 pips long. Well, you know this is what we're talking about. This thin line is your wick. Or did you see that body? It totally engulfed the day candle from the previous day. This is what we're talking about. This is the body of a candle. So engulfing candles, what are those? Okay, well, they're very large candles in a particular time frame that engulf or are larger than the previous candle. And we have a clear example right here. This candle is engulfed by this candle. What that means, what this word means, is this candle is larger. It consumes the candle next to it. As you can see, this candle body is consumed. It is engulfed. It is smaller than this candle right here. This is an engulfing candle. Same here. This is an engulfing candle. This candle is smaller than this candle, so this candle is an engulfing candle. So open, high, low, close. What is that? How do I find that? Well, first you need to know what type of candle you're looking at. Is it a bullish candle or a bearish candle? And don't worry if you're not too familiar with what bullish and bearish means. I'm going to discuss it in the next video. I'm going to show you a chart so I can correctly describe bulls and bears, bullish and bearish. But for the purpose of this video, I'm going to let you know that this is a bullish candle and this is a bearish candle. So on a bullish candle, the open is always the bottom of the bullish candle. And how does it how do you see the open, the high, the lows, and the close? Well, on a bullish candle, again, the open is always at the bottom of the candle, and when it goes all the way to the top, that's the high. When it goes all the way to the bottom, that's the low, and then when it closes, you have created a candle body with wicks. And again, a bearish candle, the open is always at the top. It goes to its highest, creates a wick, goes to its lowest, creates a wick, and then closes, and it creates the body of a bearish candle. So again, you have your open, your high, your low, and then your close. Remember, a bullish candle always opens at the bottom. That's whatever price that is the opening price of that candle. This would be the high. Whatever the high price is the high of that candle. The low, whatever the low price is the low of that candle. And then the close, whatever price it closes at is the close of that candle. Open, high, low, close. A bearish candle always opens at the top, goes to its high, creates a wick, always, and then goes to the low, creates a low, and then retracts and closes. Open, high, low, close. Open, high, low, close. And as simple as that. Now you have an idea of what a body is, what a wick is, what an engulfing candle is, and you have an idea of how to spot the open, high, low, close of a candle in a particular market of a particular time frame. And as we get further along in this educational series, we'll get more in depth and we'll continue talking about the same things. We'll continue using the same word, body, wick, engulfing candles, open, high, low, close, so you'll become real familiar. So when you're not in front of the video, when you're in front of the chart by yourself, you'll know what you're looking at. Okay, so it's not too painful. We're going to make it easy for you. So candlestick terminology continued. Well, here's some more words that you need to know. So when I start discussing some of the upcoming pictures, you'll know exactly what I'm talking about. So bulls and bears, bullish and bearish. I'm sure you've heard that, and I'm sure you continue to hear it every day if you talk to other individuals that trade in the market, whether it's stocks or bonds or currencies or options. Everybody is discussing what are the bulls doing, what are the bears doing. Are you bullish are you bullish the Aussie, or are you bearish the euro? Well, it's the psychology. Bulls and bears, bullish and bearish, is just the psychology of the market and what your where do you think the market's going? What are you? Are you bullish? Do you think the Aussie is going to strengthen? Are you Aussie bullish, or are you euro bearish? Do you think the euro is going to weaken? That's simply what it means. So the bulls of the market, they're in favor of a particular currency pair. So if you have the Aussie US dollar, and there's Aussie bulls, that means they're buying the Aussie. They're driving the price of the Aussie up. The Aussie's going forward, or they're bearish the Aussie. There's Aussie bears in the market. They're selling the Aussie. They're driving the price of the Aussie down. Bullish and bearish. What does that mean? If you're bullish something, you think that particular commodity is going up. You think that currency is going to strengthen. That's what bulls and bears and bullish and bearish means. Bearish, you think a particular currency is going to weaken. Bullish, you think a particular currency is going to strengthen. Okay? Bulls and bears in the markets, buyers and sellers. Bulls are buyers, bears are sellers. Okay? So let's see, candlestick chart patterns. Well, what we'll be discussing in upcoming videos is when you have multiple candles next to each other, they create patterns. And I'm going to show you in the upcoming portions of this video how they create patterns. So you just need to be familiar with the term candlestick chart patterns for now. Okay, uptrend, downtrend, continuation, reversals. Well, the next slide, I'm going to show you what an uptrend is, what a downtrend is, what a continuation is, what a reversal is, and I'll be able to better explain bullishness and bearishness. Okay, so what we are looking at here is a candlestick chart on a MetaTrader 4. I took it off a MetaTrader 4 platform for your viewing, so I can show you a few things. So this portion right here, this is a small continuation of a sideways trend. It's just choppy. It's not doing anything but going sideways. We have some highs, we have some lows, but the general trend is sideways. Okay, you're not really breaking out of any zones. So imagine in a support line right here. This is a downtrend. You see that? So when anybody says, did you see that downtrend, or the market's trending down, the Aussie dollar's trending down, the Aussie's getting weak. It's downtrending. Now right here we have a small uptrend. And I say small, I mean it could be large to you or to other traders, but compared to this downtrend, this uptrend is small. So you have this downtrend followed by a small uptrend, followed by a downtrend, followed by a continuation with a minor increase to an uptrend. So let's go back to the other video, to the other slide. So we have our bulls and our bears, our bullish and bearish candlestick chart patterns, uptrend, downtrend, continuation, reversal. So I want to show you that again. So we have our continuation again, followed by a downtrend with a reversal to where the currency pair goes up, with a reversal to where it goes down, followed by a continuation. So our downtrend, uptrend, downtrend, continuation. Now, how do the bulls and the bears fit in here? Okay, well, let's see. Right now, if I was to show you this portion right here, it means that we are selling this particular currency pair because it is going down. It has a huge downtrend. Those are the bears. The bears are in the market heavy. And we have a little bit of congestion where the market's not really doing anything, and the bulls enter the market and they drive the price up. Then the bears get back into the market and they drive the price down. And then the bulls and the bears are evenly necked in the market, and the market is going in a continuation sideways trend. So right now, if you were to ask somebody what were they in the Aussie dollar and the market was trading right here, they would say they're bearish because the market is trending down. And then if you were to ask somebody right here, they might say they're bullish the Aussie for a couple days because the market's trending up. So that's basically it when it comes to the bulls and the bears. Bearish and bullish, uptrend, downtrend, continuation, reversals is right here on this chart. So basic candlesticks. Now there's a lot more candlesticks than this, but for the most part, these are going to be your basic candlesticks that you're going to spot everyday trading. So let's go ahead and discuss them. A doji. This is a doji. So let's see. The doji occurs when the open and the close for the day are the same. It depicts indecision and can often mean impending weakness in an uptrend. Okay, so The market opened, went to its high, went to its lows, and then closed right where the market opened. A hammer. The real body is small. In the upper end of the range, the color is not important. So it doesn't mean if it's a red or blue candle, a bullish or bearish candle. The lower wick should be larger than the upper body. Okay, generally bullish. So right here, this lower wick is larger than the body, or it's the same size in this case, but this is a hammer. It kind of looks like a hammer. And later on in the upcoming videos, we'll discuss the significance of a hammer. This is a hanging man. The hanging man is considered bullish because of the uptrend. The color is not important. Could be bearish if the body is black and the next day opens lower. So right now, for the purpose of this, let's just know that this is a hanging man, and when we put it in charts and when we see it in charts, it will have some significance. But I just want you to be familiar with these terms. So we've discussed a doji, a hammer, a hanging man. Now we're looking at a shooting star. Okay, the shooting star indicates an end to an up move. The body of the shooting star does not gap up over the previous day. Okay, so it's very important to just become familiar with these terms for now. Bearish engulfing, we've discussed engulfing candles. Bullish engulfing, we discussed engulfing candles in the previous part of the video. We have dark clouds. We have morning stars. And we have evening stars. We have a candle, the evening star, and another candle. A candle, the morning star, and another candle. And again, I don't want you to be stopping the video and going to Google and trying to figure out what these mean. Right now I'm just letting you become familiar with the different candlestick names. So when we do discuss these in the upcoming videos and we get in depth into candlestick patterns and candlestick types, you're not hearing the name for the first time, okay? So right here I'm going to kind of put some of these this is a chart, and I just want you to see some of those terms we just discussed. I want you to see the visuals of them. Okay, so right here, this first circle, we have this candle right here. This is a bullish candle. As you can see, it's going up. The trend is up, so the black candles are bullish and the white candles are bearish. And right here, this candle is a bearish engulfing candle. It consumes the candle to the left. It lets you know that the next move is going to be, or the move now is going to be bearish. So this is a bearish engulfing candle. And then what we have right here is a morning star. Okay, this one right here. It lets you know this is the end of the downtrend and a reversal is about to happen. So you have your downtrend because of your bearish engulfing candle, followed by a morning star. So this is a reversal candle, followed by an uptrend. So you have your bearish engulfing and your morning star right here in this little circle. And then I wanted to show you this so you can actually see trend in the market. You have an uptrend followed by a downtrend. So you have a reversal in here, okay? And what you have is a shooting star. This is a classic shooting star. Okay, the shooting star, remember, indicates an end to the up move. So you have an up move, uptrend with a shooting star, which indicates the end to the up move, followed by your downtrend. So this is a very, very good picture of it. Now we have an uptrend again, and I want to show you another piece in the market right here, another candle in the market, a hanging man. Okay, the hanging man is considered bullish because of the uptrend. However, it could be bearish Okay, if the body is black and the next day opens lower. Okay, so now you have a hanging man, or you can have you can have an evening star. So however you depict this actual candle, it really confirms with what happens after. In this case, it looks to me more like an evening star. Evening star is a bearish reversal pattern, so we'll go with that. So you have your uptrend with an evening star with a bearish engulfing candle, followed by a downtrend. Now, if we would have looked more at this chart or zoomed out so we could see a broader range of the chart, this downtrend we would see continued on for quite a while. So this is very, very good picture reference for you. So you have your bearish engulfing, okay, that's very good, followed by your morning star, uptrend, okay, downtrend, okay, uptrend, downtrend, and then you have your candles that are of significance. And we'll get more into it, so don't worry about now. I know this is quick. As we get further along in the educational series, we'll start talking more about it. Oh, here, look what I just saw. You see this? This candle? That's a doji. Remember? The doji is where the open and the close are the same. Okay? Shows indecisiveness in the market. This is a nice, nice little doji right here. Let's see if there's another one. I don't see any other ones, but here's another bearish engulfing candle. Let's see if we can find it. Here, right here. This is a bullish engulfing candle. Totally engulfs this candle. This bearish candle totally engulfs this candle. And then you have your uptrend, your downtrend, your uptrend, and the overall trend is up. So some candlestick basics. This right here is just going to kind of go over what we've already talked about, but it's good to know, and it's good to use for learning. So we have bullish and bearish. Usually how I set my charts up, my bullish candles are green and bullish candles are red, or bullish candles are black, bearish candles are white. You can make your chart however you want, but this right here is one of the most popular. So you have on your bullish, you have your open at the bottom, remember, with your close at the top, with the top of the highest point that the candle reached in the market, your high, and the lowest point your candle reached in the market, your low. So you have your open, high, low, close. Upper shadows. Some individuals refer to these as upper shadows or wicks. And then your real body. Your real body. Okay, and this kind of just defines it a little bit more for you. So this is your open or closing price, depending on what type of candle it is. So remember, your bullish candle opens at the bottom, so you're open, or right here, your bearish candle opens at the top. So that's your open or close, and then this is your open or close. This is just showing you more definition of the actual candle. So the highest price for the day, the lowest price for the day, and then a body is black or red if stock closed lower. In this case, we're talking about currency. I grabbed this picture off the internet just to show you some good visuals of definition. And body is white or green if it closed higher. So it's just letting you know bullish or bearish. So it's just a good little reference for you to know what the wicks mean, and whatever type of candle you're looking at, what's the data inside of that candle. So what's the difference between candlestick charts and bar charts? Well, I mean, it's visual. So your bar chart, it tells you the open, the high, the low, the close, but it's boring. It can be tricky. You might not know which one's a bullish candle or a bearish candle. It just doesn't give you the definition concerning visuals that candlesticks do give you. So this right here is the same chart as this. Okay? All I did was change the type of chart. So right here you have your big doji, um, followed by your bearish candle or bearish bar with uptrend bullish candles. Then you have your reversal candle or bar following down to the downtrend. So this is just boring to look at. If you're not very knowledged in currency trading or trading period, you could get lost looking at this. This is why we encourage candlesticks. Um, I like looking at these. You can see the visuals in the market, what happened that day, what happened in a particular time frame, whether it's a 1 minute, a 5 minute, an hour, a week, a month candle. It's just way easier to decide and to visualize what might happen next concerning trend. So that's the difference. It offers a visual um, enhancement into the psychology of the market. Okay, so that's the end of volume 1. Um, Now, I want you to know and I want you to realize that um, as we get further along in the videos, you're going to know what I just discussed there because I'm always going to go back over it. It's going to be terms that you hear. It's going to be patterns that you see, candles that you see, candlestick names that you hear. You're going to hear the wick, the body, uptrend, downtrend, reversal, continuation. You're going to hear this over and over. So I felt that starting with the very basics and slowly graduating to the next level would be most beneficial for you as a trader. I'm going to start um, with the assumption that you have never traded before, that you have never heard these terms before, that you have never seen this type or style of trading before. And I think that's going to be the best way to teach you. So I thank you. I thank you for your support of 5-star signals. And well, let's see. The very next one we are going to discuss particular candles. So we'll start teaching that. Okay, well, thank you.